Hello and welcome to another update video. Today we want to take a look at Marathon Holdings. We start on the 4-hour chart. It's a crypto miner. It is quite a popular one. I want to share with you the latest adjustments and updates to the Elliott wave structure. And interestingly, Marathon is also in a wave 4 at the moment. Possibly already completed, but I'd say there's still a good chance for another test of the main support area on the chart there. It is in a wave 4, similar to Bitcoin, and the next rally could send it higher in a wave 5, in possibly an expanding diagonal pattern. So one more high would be likely in this current cycle, but it could be a substantial one, given that this here could indeed be an expanding diagonal. There is no impulsive structure here, very important. And also, I see sometimes these crypto miners, they are a little bit like altcoins. They are highly volatile charts, but they are very choppy when we talk about the microstructures, okay? So it's a dangerous chart potentially. It's a dangerous chart for heavy trading. You need to understand these are no investments. They are a little bit like altcoins, just for swing trading because they are so volatile. So looking at this move up from the 2022 low, which was the beginning of the bull market, we have started an initial rally with a wave 1. We had a wave 2 pullback, which is also a key invalidation point for any further bullish upside. I mean, this is the key level here at $5.15 pretty much, right? When that breaks, I mean, this definitely is invalidated, but it will already be invalidated earlier based on micro patterns. For example, this B wave low shouldn't really be broken. That's the next invalidation point. And this B wave low, which is wave B of 3, this B wave low bottomed in September last year. So since then we obviously rallied. I call that a C wave. It's a 5-wave move. So we have a wave 1, a wave 2, a third wave. It's only 3 waves up. They can always fail after 3 waves, but that's why I'm tracking support. If this is a wave 4 now, ideally it's going to hold within the trend channel, and it's holding the $10.70 level. Because in any wave 4, even if it's a diagonal, we don't really want a break below $10.70. The structure here is difficult, when we talk about the microstructures, but this is the main support area against which I'm still watching for a 5th wave rally to the upside. Any break below $10.70 will not necessarily invalidate this wide structure, but will make it less reliable. And the invalidation point is then the low of the B wave at around $7.10. If we talk about the micro patterns here, you can see there are 2 scenarios basically in this bullish count. Either the wave 4 already bottomed and we're now moving up in an A, B, C structure straight away in this wave 5. And then this was a wave A because it's so choppy. It could be a leading diagonal. So an A wave, but it can also be corrective. That's the problem with this structure because it's so choppy, lots of overlap. This here to the downside could be a B wave. It looks a little bit more like a B wave. Let's go to the 1-hour chart because it is also it looks very corrective on the way down. So I would not be surprised if we take off directly from here, but it takes a break above this high. Let me tidy that up. Takes a break above this high because this would be the invalidation point for the white count in which a wider 4th wave is unfolding. Okay, so that's basically a key breakout point, you could say. Let's highlight that in green, and that is at $22.85. So if we see a break above $22.85, it could indicate the beginning or let's say the onset of the C wave rally, A, B, C in wave 5. Yeah. And the main reason for that is that it will invalidate the white count as it is. So then the B would be here, and we might have already started the C wave rally, but it's not very visible. I need a breakout or something. You could also add, I'm not sure how reliable it is, here this set of the trend line here. So pay attention to the trend line. It could be an early breakout point. Breaking above this trend line, which has 4 touch points, is interesting as a signal. Or even 5 touch points. 1, 2, no, it's 4 touch points, maybe 5, but that could send us to that next high. at, as I said, around about 2280, 2285. And then from here we could go. Now, it's possible that we're still in the fourth wave. It's not very clear because this move down looks just too choppy. Could be wave C as an ending diagonal. If it is wave C that's unfolding, it should send us to round about, let me double check that. Should send us to round about $13, $14 down here. Okay, which means that technically speaking, I'd pay attention to possible upside breakouts. But we need a signal first. I gave you two possible signals here that you can watch for. Until then, the downside pressure is high, but I think it's gearing up for a move to the upside. At least the move down isn't really aggressive enough to indicate we are in the C wave to the downside. So while I have no signal really that we are already in that C wave rally to the upside, a breakout could be that signal to watch out for maybe in the coming, probably in the coming week or next 1 or 2 weeks. Yeah, and okay, if we dip into the support region, it could indicate that it might be interesting for a pullback trade, right? Because from here then, especially the area around $13 to $14, we could reattempt the rally. That's the update about Mara. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.